Bitcoin has fallen directly out of this channel and hit this level real hard down here that I've had drawn on my chart for probably a month and a half now. The question is Bitcoin price going to come back into this channel and survive, or should we have an extreme short bias? I'm going to do two things in this video for you that's going to give you an understanding of when you have an edge for either side. It's going to be extremely simple and it's going to be highly effective, so you need to watch the whole thing. We're going to split this into two things. I'm going to show you the previous channels of this bear market, and we're going to dissect the anatomy of how Bitcoin fell out of it and down for the next leg down. And then the second thing, I'm going to give you an extremely clear way to establish a threshold using one simple tool to determine, is Bitcoin just going to bump its head and fall back down, or is it going to charge back in here? It's going to be super simple. So I'm going to cover that at the very end. Make sure you stay tuned. Let's go get some Bitcoin. I am on the 2-hour chart. The current channel that Bitcoin is in started back here. If you haven't put this on your chart yet, it might be a little late because it's fallen out. I don't know if it's going to come back in, but I'm going to give you the tools in this video to determine it. So I don't know if it's going to be worth new viewers' time to draw all this in here unless you do it for practice. But this channel started on June 18th. If you want to take a second, take a snapshot of how I did this. And this tool right here, that's orange and black, is called the rotated rectangle. Everything else are just lines perfectly parallel. All right, here we go. So let's go to the previous channel here using a rotated rectangle. The anatomy of this: hit the bottom once, twice, 3 times. You had some weird type of bull trap here. This was a BART pattern, a double BART pattern. It was very, very strange. I personally got my butt kicked during this. I think it had to do with a monthly. Was it a monthly? No, it wasn't a monthly close. There was some type of big closure or FOMC type of deal with high impact economic data. This is very strange stuff. So what you see here is not common happen inside of a channel. But regardless, you've hit it 1, 2, 3, 4 times, and then just fell out and then didn't even come up to bump its head. So notice, as I'm going to zoom into this part, watch. So we're looking at the anatomy here, and it hit the top as well a few times, right? A little bull trap up here, came back down, hit the bottom. But the key is right down here. Let's zoom way in. After it fell out, did it come up and bump its head on this channel? It did not. And at the end, I'm going to show you what it hit its head on exactly. And you're going to be able to put it on your chart to determine, is it going to come back in. Here, we had a downward facing channel after Bitcoin fell out of an upward facing channel. So this one can be interpreted slightly different because the momentum was already down and Bitcoin was essentially, during this little pump up here, it hit its head on the previous channel it almost hit its head on the previous channel up here. You can see that, boom, like this. So it tried to get back in. So it fell there. Actually, let me get rid of this channel. That one doesn't really count. So Bitcoin fell out of this channel. I'm going to zoom into this part. Look, it did not bump its head on the bottom of the channel. Something right here stopped it. And again, at the end of the video, I'm going to show you what it is. Bitcoin tried to come up again to get back into the channel on a second attempt, and something here stopped it that was not the bottom of the channel. There are two, so one, and it's probably something different, because if one thing stopped it here, a second thing had to stop it here. And I'm also going to cover that at the near the end of the video. I'm going to show you what to put on your chart so you can determine if Bitcoin price is going to come back into the channel or not. So those are the last several channels. Bitcoin falls out, and it can't even bump its head at the top of the channel. So let's go to the current situation. I'm going to zoom way in here. And I'm going to keep myself big, make sure you can see behind me here. Okay, so what is getting ready to happen right now? Bitcoin is trying to decide whether or not to hit its head on the bottom of this channel. Very simply. Can you see that? Here, zoom way in there. See, give it a kiss. See? Mwah. See? Like, let's talk to it. Come on, Bitcoin, get back in there, you know? No, it might not happen. So what is going on here? And what can we put on our chart that stopped the other price action that we just went over? What stopped it from hitting here? And it's super simple. The 4-hour 10 EMA. It's wicked, wicked simple. And the 4-hour 10 EMA isn't just key to use when you fall out of a channel that you might or might not have drawn. It's very... It seems to be the algorithmic, you know, whatever hedge funds and all that are using. For some reason, after Bitcoin falls in a more immediate sense. So you have a first big drawdown. Whenever Bitcoin tries to recover that first and second and often third and fourth times, but it's almost always at least twice. On the first two attempts to come back up after a first big drop, it always hits its head on the 4-hour 10 and goes down. And there are 2 to 3 ways that price interacts with it. So now we're going to go into how price interacts with that 4-hour 10. And then after we do this, then I'll show you the second layer of defense. So I'm going to throw on the 4-hour 10, make my dumbass small so we can dive into here. All right, now we have the 4-hour. Actually, let's go to the previous ones. All right, check this out. I'm going to go here and boom, bada bing. So price fell out of this previous. So this is a previous channel we're staring at here, right? Okay. Let me go to the can I go to the 5-minute chart? Maybe I can't. I need to stay on the hour or 2-hour chart. Okay. Here we go. So, but it's still the 4-hour 10. I'm on the 1-hour chart. You can see here, after it fell out of the channel, Bitcoin could not get back above or even touch the 4-hour 10. This is like a magnet pushing it down with the same poles facing each other. It had a repulsive action. Or you could see this. So imagine the 4-hour 10 is like it's a war between bulls and bears. Imagine one of those movies where people are fighting in the past where they just marched up to each other and started slaying each other, right? One of those scenes. So that's what's happening here. This is the bulls. The price itself is the bull side of the war, right? The bull army. And this line is the bear army. And imagine it just one person in the bear army, for example, just pick one person. It's like a shield. They're running into the opposite team and just plowing into them and then hitting them with a bludgeoning, some type of bludgeon tool, because swords actually weren't used as much as what people think as they show in movies. It didn't work with all the armor, at least like back in, medieval times up to like 1700 when they covered themselves in armor. Anyway, so this is pushing price down. It is the bears' war defense, right? It's them pushing the bulls down. And imagine price as the bulls, and these guys are going to win, right? If price can't pierce this. Making sense so far? Let's go to the previous one here. Let's also look at just normal fall downs outside or even inside of a channel or just in general. Watch this. Let's take a look. So you had a first big drop. Where did price go to? A failure pattern above the 4-hour 10. Okay, so it peaked its head above, couldn't get above, and came back down to make a low lower than the original low. Making sense? This one did not behave the same because this was a bull trap. This is FOMC, Jerome Powell of the U.S. Fed was talking, and it did not behave quite the same. Here we go again. We have a big drop down right here, and price came up to bump its head on the red line, the 4-hour 10, and made a lower low. On its second attempt, it did get above. Here, it fell down again, bumped its head on what? The red line, made a lower low. And then it came up again, bumped its head on what? The same thing, made a higher low, and then came through. Making sense? So this is the first line of defense that the bears have so even if it's not falling out of the channel, just in general, when you see a big move down on Bitcoin and it starts recovering on the first and even second time, you just know, look up, price is going to hit that 4-hour 10 twice and probably go back down. And the first time, it's usually going to make a lower low. The second time, it has a chance to make a higher low. And if it does make a higher low, then the third time it approaches, it's not that early in the morning, Tim. The third time it comes up to hit the 4-hour 10, it usually busts through if price had made a higher low after getting rejected the second time. It's really that simple. It happens almost the same way every time. 4-hour 10 is a very, very important tool to have after you see any first original aggressive move to the downside. After Bitcoin's going sideways or maybe a fake out, then it goes down heavily, 7%. Just throw on the 4-hour 10, and you're going to feel comfortable in knowing when Bitcoin's about ready to stop on the first rebound up and the second rebound up. It's really simple. All right. But we're going to apply this to, is Bitcoin going to get back into its trading channel, or are we going straight down from here? All right. Now, check this out. Let's do a couple other drawdowns here. So Bitcoin had a first big drop, and it came up way shy of the 4-hour 10. Came up way shy of the 4-hour 10. Came up, hit the 4-hour 10, rejected. Came up, hit the 4-hour 10, rejected. Came up, rejected again. Came up, failure pattern, lowest low. Came up, rejection pattern, higher low, and then busted through. So it did not get, so just once again, as I just described, it did not get above the 4-hour 10 until it got rejected from it and made a higher low. That's usually how it happens. It's not every time, but sometimes it's just on the third or fourth try without a higher low, it'll get above as well. But here is about the 5th or 6th try, had to make a higher low before it finally got above this red line, right? So rejection, 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 failure pattern, 2 failure patterns, higher low, boom, finally got above, right? And so it takes a lot of effort to get back above there after a first big drop down. Here's another big drop down, and this was after a nice bullish run. A big drop down, came up, perfect rejection from the 4-hour 10. Lower low, perfect rejection from the 4-hour 10. Equal low, rejection from the 4-hour 10. Higher low, still got rejected even after higher low. Lower low, rejection. Higher low, got above finally. So this took like 6 or 7 times. I mean, Bitcoin doesn't have time to wait 6 or 7 times here. It's falling out of a trading channel. You seeing that? Now, let's even take off this channel here. So on these times that Bitcoin was so try to look at moments like this or like this as Bitcoin is falling down. Sometimes when Bitcoin does a failure pattern above it, like this one right here, let's zoom into this one. This is a good little area here. Bitcoin had an original drop, rejection from the 4-hour 10, failure pattern, rejection, failure pattern, a big failure pattern got above. What was this second line of bearish defense? What's stopping it up here? Really simple. The daily 10. The daily 10 and the 4-hour 10, it's like this zone here. It's got some type of force field. You see that? And it's hard for price to get above it. And then once finally it can smash, let's take off price. Once it can smash these two EMAs together, then price has a better chance to get above. But when these are farther separated, it makes this force field stronger and price has a harder time getting through until the force field has shrunk like this. It's like a river. It's hard to cross a fat river, right? A fat river. I don't think anybody in the world's that's a fat river. No, a wide river. It's hard, right? It might move faster. It's got a stronger current. There are more crocodiles or alligators in it, whatever, snapping turtles to get your toe, whatever. But it's more danger here. And when did price get finally above this force field zone? It's after it got smashed and the force field got smaller and boom, let's put price back on. That's when it got above. Right? So you can use both of these tools to try to determine, is Bitcoin going to go back in the current channel or not? And let's check it out. Here you go. And if you want, we can do something like 60. What you could do is you could go to the 4-hour chart and put on the 10 and would it be 60? Would it be the 60? Let's do this. You could use an EMA fill. Instead of, you could use this instead. So you could go to the 4-hour chart and use an EMA fill using the 10 EMA and the 60 EMA, which is kind of like the daily 10. And this is your force field. So is this force field wide? Yes. So does Bitcoin have a good chance to get through this force field? No. So in order for it to get through this force field, which is the daily 10 up here at the 4-hour 10, what would need to happen? Bitcoin would have to chop sideways in this black triangle for a while to allow this 4-hour 10 to come here and the daily 10 to come here. And what would that do? That would make the force field smaller. So that's got a lot of the river's really wide and the river gets small. So it would take, about so this is about August 24th, August 25th right here. It would take about 4 or 5 days of sideways before price has a solid chance to get back in here. Is it possible it just races through this force field? Yes, but we just went over several examples. It's extremely unlikely. We saw multiple examples where it took 6 and 7 tries to get above. So this is going, so in this black triangle, which it might be convenient to draw it per what I was saying, in contrast to what I was saying earlier, it might actually be worth drawing this channel and the horizontal in this black triangle, but price likely isn't just going to snap back in. It's highly, highly improbable, but these are the two tools that you can use to determine, hey, is price going to come back and stay in this channel or not? And if price is in this force field area, okay, and again, this is called an EMA fill on indicators. If you go to indicators and just type in EMA fill, I don't know which one I use, but I personally have moving average shaded fill area crossover by A Ballard 11. This is the exact indicator that I'm using, and I am on the 4-hour chart to do that. But I prefer to have something like a 15-minute chart, take off that fill, and I throw on the 4-hour 10 and daily 10, and I just know that the separation between here is wide, so therefore when price gets above, I know it's probably going to be a failure pattern above the 4-hour 10 if this is wide. Does that make sense? And again, I'm not giving you any short signals, but this is not financial advice. However, I am telling you it's highly probable if price gets like a little bit above this red line, it's probably going to come back down, and it usually makes a lower low, but it does have a chance to make a higher low, or a higher low like this. It'll probably hit this line right here at 21. Let me put a pin in this. So after it interacts with this red line, which this red line might come down here first. So somewhere around 21,553, price will, if price is up there at that point, it's going to have double resistance from the bottom of the channel, which it would hit this time. It kind of looks like it wants to, and you have the 4-hour 10 as another type of resistance, and it would probably make it usually makes a lower low than that, but if you look back up, it's not technically the first time it's hit it. So you had an original first drop, it's hit it once, twice, failure pattern, 3 times. But I think that count has reset because you fell again below this point of control, which is the middle of the chart, the middle of the range. So I think the count has reset. I don't think you can count this as the 4th or 5th attempt. It's a big drawdown, and this is the first attempt. Therefore, it's highly, highly, highly unlikely that it does anything more spectacular than a failure pattern above. So the most bullish thing that I can see before this puts in 4 or 5 days of sideways in this black triangle is a failure pattern above this red line. And since it's not even close to it yet, this red line is going to come down, and you can get a failure pattern above, hit your head exactly on this point, and then you have a chance to make a higher low. Where do higher lows usually form? At a roughly 45-degree angle from the previous low, matched with the horizontal, and that would be something about right here in this area. Bitcoin would have a decent chance of coming back somewhere as low as 21,000 even, or as high as 21.1, somewhere in that area after this first failure pattern. And so if you want price to go up, right, because you think the bottom's in, all this stuff. Okay, let's say you have some bias, like, I want price to go up. Well, that's fine. I've been in that boat before, and I've been wrong with that, and I've been right with that thought before. But you don't expect it to go right up, even if you want it to. If you want price to go up, you want it to go sideways for about 4 days because the force field is too wide. Why would you put a player against an opponent that is too strong? Wait until you weaken that opponent or that force field, the distance between the 4-hour 10 and the daily 10. Wait, you want it to go sideways if you want it to go up. And so if you want it to go up here, this might be a more valuable way to say it. If you want price to go up, don't have the expectation that it does it right now. Have the expectation that it does what it usually does. It'll have a failure pattern, and then it goes sideways, weakens the force field, weakens its enemy, and or like a smaller boxer against a bigger boxer. You need to wear out the bigger boxer. That's your only. You don't come in the first 3 rounds and try to like get close and do all this stuff. No, you play defensively, wear that person out, wear out their lungs, and then you start attacking later in the later rounds. And that's what price has to do. It can't go out in round 1 and 2 and start boxing hard and getting close to its opponent. It cannot do that. If you want price to go up, that's not what you should have expected. You should expect 4 days of sideways. Hopefully this was valuable. Click this video right here. If you want to learn how to set up a chart like mine, because you might have been lazy this whole crypto journey and you have been hurting and not having such a profitable crypto journey, because you don't know how to set up a chart, and click this video right here if you want futures trading tips that you won't hear anywhere else. It's geared towards folks who are newer to attempting to trade in futures. You just got Timified worldwide. Have a good weekend.